As you can see here, we're looking at the NASDAQ on the left, the S&P on the right. We are on the hourly time frame, and I believe this price action was Monday. This price action here is Tuesday, and we had an SMT with the Dow down here. Keep in mind there was no precision swing point here, and also the Dow is a little decoupled. So for the people asking how do I trade whenever the Dow is decoupled, as long as it tips its hand a little bit, as shown right here, you can still find something to do. So we had that SMT with the Dow, and then afterward, an hourly fair value gap formed, overlapping another fair value gap, creating a BPR, which is important. So dropping into a lower time frame, going from the hourly to the 15-minute, still have the NASDAQ on the left, S&P on the right. Dropping into the hourly fair value gap, you can see we formed a 15-minute precision swing point. And also keep in mind of how there is a cracking correlation with where the precision swing point formed. So this red box is the hourly fair value gap. The NASDAQ formed the PSP inside of it, while the S&P failed just a tiny bit below the true open. So now dropping into another lower time frame, encapsulating this small piece of price action right here after the PSP formed, going into the 5-minute time frame, you can see there was a tiny little TPD. We expand higher, retrace into a gap that's also a BPR, and then expand higher. Now this one is for your notes. Whenever you have a consumer confidence or FOMC minutes kind of day, especially consumer confidence is one of the worst trading days to try to trade in. All right, take this from experience. If you've been around for a little while, you know. Consumer confidence is one of the worst days. So typically your clean bread and butter setups will happen before 9 o'clock. So once that 9 a.m. candle opens, price will usually chop around and wait for the news release. And then the news releases, and then you get terrible price action for the rest of the day. And there was still a clean, easy setup in here. But there was no S&T. So if you go from the higher time frame narrative of an hourly chart, looking at the weekly cycle, an hourly gap, and then within that gap, you look for a 15-minute PSP. And then within that 15-minute PSP, you look for a 5-minute entry technique. You can find bread and butter setups without needing a second stage SMT or an intraday SMT at all. So I call this make this a little bit bigger. Just trying to make me log into a broker on TradingView. The continuation model. So one. So you don't need SMT whenever you have this. As long as you have the key level, a PSP within that key level, and then on the lower time frame, the entry technique, you're golden. But it stems off of the higher time frame narrative. So remember, our higher time frame narrative was bullish since we had that SMT with the Dow. But in all honesty, if you see this, you could see this as a stop run and then see the gap, and then you still know what to look for. So does that make sense for everybody? And also, this setup formed today within an hourly gap. This setup forms all of the time. No, there was no. This is when you don't need daily cycle or 90-minute cycle SMT. Whenever you see a trade run without you, go back and look at all the times trades ran without you, and there was no 90-minute, no daily SMT. Look for this. Because it happened today, happened yesterday, happened Tuesday. So you're following normal time frame alignment, going from the H1 to a 5-minute chart. But this is too ambiguous. How do you know when the key level will play out? How do you know when time is right to go down and drop into the lower time frame? This is how you find out right here. Everything will be recorded, so you can go back and listen to it as many times as you need to. We need SMT on the higher time frame, right? It is best to have SMT on the higher time frame. As long as you have narrative, you're fine. Golden. And yes, you could just buy within the gap, but this shows you when and where to buy. Getting confirmation, adding probability to what you already know. Narrative equal SMT BPR. That is a good way to look at it. So, as of right now, I'm not too interested in the NASDAQ as it is a bit decoupled. S&P looks cleaner in my opinion, and I don't want to try to trade ahead or predict weeks like this because holiday weeks tend to wrap up sooner. Like today should have been your last trading day. You don't want to trade tomorrow, you don't want to trade Friday. It's more than likely going to be lackluster. But gun in my head, I would like to see this high get delivered and then that 6,053 and a quarter level. So I want to see higher prices heading into tomorrow and Friday. And it doesn't have to reach there this week, but that is my current draw on liquidity. But yes, generally speaking, on these holiday weeks like Easter, especially Christmas, the markets are closed for like an entire week. And trust me, you don't want to take a losing trade on Christmas Day and then have to be around your friends and family or whatever, and then it's just constantly going to be in the back of your head. Just avoid it altogether. Practice patience. That's what these are for. Those bank holidays, those low probability days, they're used to practice patience. Why long? We will see if it pans out. Can explain it in next week's live stream. But so far in November, we have yet to be wrong. Our analysis has been pretty spot on. Not to be cocky or anything, because everybody gets it wrong from time to time. Nobody's perfect in this business. And if you want to backtest and study, if you take this, what was TAR right here, apply it to today's price action, I believe it was around 8 o'clock, price revisited a fair value gap, an hourly fair value gap, formed a 15-minute precision swing point, and then gave a very clean 5-minute entry technique. And yes, we will get on to entry techniques in the future. But as you all know, for the ones that have been paying attention, you have usually 1 to 2, sometimes 3 ways of getting in if you're lucky. And then the move is gone. What is my favorite entry technique? Probably this, the continuation model. I love it. It happens, and especially so with this, SMT is optional. You don't need to see SMT. The only thing you need is the key level and the gap, and you can replace the key level with SMT. It's interchangeable. But this right here is this is only an introduction. Yes, I love continuation trades. So if we form a weekly SMT and then expand, leaving a gap, the next day during Q3 New York AM, we drop into that gap while also running stops and forming an SMT, forming a PSP. It's like 90% win rate. So we can do a little bit of Q&A if you guys want to. Was the 15-minute in your first example a TPD? Yes. As you can see, this would be candle 2, candle 1, candle 3. There's a cracking correlation between the close and the opens. And that's why the S&P expanded a little bit higher following the day. And cracks and correlations are literally everywhere. Once you see them, they're everywhere. Every candle is a cracking correlation. Once you dig deep enough and see. Can you show us an example of a continuation PSP? I believe. Really, for continuation PSPs, you have to know, it all follows with premium and discount, knowing where you're at within the range. You don't want to be bearish in a bullish market, you don't want to be bullish in a bearish market. You don't want to buy in premium, you don't want to sell in discount. So if we're still trading within premium and we already reverse and then we form a precision candle or a precision swing point while still being in premium but have had already reversed, then you can expect that PSP to be more of a continuation, because PSPs give you the framework, especially on the daily time frame. Once you remove doubling, remove all that, once you move back to basics of using the normal time frames, there more times than not will be an SMT within a PSP or a TPD, which is, I'm getting too ahead of myself. Too much. But I believe one of these candles right here were PSPs and they were used for continuation. Does candle 3 have to expand? Yes and no. If candle 3 doesn't expand and candle 4 does, that's a possibility, and the only reason why that happens is because time of day. But if you see candle 2 be a PSP, and then candle 3 be a PSP as well. That is, and it's a non-news day or back-to-back news days. They don't have news. That's indication low probability. If you have two PSPs back-to-back, and having the economic calendar and news, knowing what time it comes out, will tell you if candle 4, which we haven't talked that much about candle 4, but that'll tell you if candle 4 will expand or just continue consolidating. If candle 2 and candle 3 are both TPDs, if news comes out during candle 4, you can expect candle 4 to be pretty explosive. And don't worry, everything will be going in depth and do it all in 2025 for those that have joined me so far. Hey, TPD pre-news or 9:30 open is a good place for an entry or stop. Then, yes, if you have a TPD and a higher time frame SMT beforehand, you already know what to expect. But if you don't, if you form a TPD right before that, so let's just play devil's advocate here. You're on a 15-minute time frame. The 9:15 candle closes as a PSP. The 9 o'clock candle would then be your candle number 1. If there's no micro SMT in there between candle 1 and candle 2, focusing on the 15-minute time frame, then you can expect candle 3 to form an SMT on candle 2. And that's why sometimes you'll see the market run stops really quick or wick below that 9:15 buy side or sell side liquidity, wick above or below it real fast, and then off it goes. Should we focus on PSPs formed inside gaps or purge higher low, the same highest probability for reversal? Both. Both are important. It depends on your time frames you're looking at, though. That's the most important. You want to stay on the time frame of cycle. If you're looking at it above an old high or below an old low, but once it's inside of a gap, then you can add the doubling. You can kind of work your way around things. Today's price action, we had all the assets close above of Q2, but NQ didn't take the previous day highs. That's still SMT. Technically, I know what you're talking about. Didn't it form an Asia session? I believe so. Take a look real quick. Yes. You're talking about right here. And also, who remembers last stream? Who remembers last stream? Turn off set. Here we go. Whenever I outline this daily fair value gap. Now count how many setups happened within this single key level. 1, 2. You could have even used it as a draw right here. 1, 2, 3. There's another one. 4. Setups are everywhere. Once you understand what key level should hold, it's crazy. What times they shouldn't hold, crazy. But yes, this still would be considered an SMT because your highest degree of probability is going to be the wick in the body. But if it forms, say an SMT forms with only the wicks and it's in a key level and we expand down, especially if we form a gap, you can anticipate it to hold. So yes, while you still can find something to do off of this, even though it's just between the wicks, ignoring the bodies, it's still viable, you can still use it, but your highest degree of probability is going to be between the wicks and the bodies. What about bearish yearly cycle and QC cycle for bearishness? We're talking about the yearly cycle and quadrennial cycle for futures. Today we had 2 a.m. TPD H1TB. If we can see this, can we anticipate London highs to hold? The only time you want to see the 2 a.m. be a TPD is on the 4-hour time frame, because that indicates when a daily SMT should form. So for index futures, as a general rule of thumb, you don't want to look at any cycle above the monthly cycle, because these markets are the fastest and most manipulated, and they're literally designed to trend upward over time. Like if you look at the years, the S&P has closed bullish versus bearish. They're literally designed to go up. So you don't want to be focusing on like the yearly cycle or the quadrennial cycle, because it's just not worth it. They're already designed to go up, so there's no point in going that high. So anything the monthly cycle and below should be your main focus. What qualifies as a key level for you personally? SMT and time. But once you have that SMT there, which builds narrative, you can take SMT off the table entirely. It's 4-hour 2 a.m. similar to Tuesday daily for its respective cycles. No, you got the right idea. You have the right idea, but it works a little bit different. So the TPD videos, I had to fit the time frame alignment, what everybody else knows. I had to fit that so it would make sense for everybody. But there are different ways you can look at it. So it got things stretched the boundaries a little bit for those TPD videos. That's why you only look at the 2 a.m. 4-hour candle for index futures, and you have to like discard 1 hour on the Forex chart. If you guys have seen the videos, that's why you have to like disregard an entire hour if it forms on the 2 a. Like you had to find a way to fit the time frames within the quarters, so it makes sense for everybody. But there are ways to stretch the boundaries, which we can get on later, because I don't want to put too much on you guys. Yes, there are different sequences, and each sequence has its respective time frame. Well, time frame alignment. No, the 8 a.m. hourly PSP would be indicative of a 90-minute cycle SMT. Because from the hourly time frame, you would move to a 5-minute chart. The 5-minute chart is made of the 90-minute cycle. But in order to actually see the SMT, it has to be at specific key times of the day. And that's why I specifically chose the 2 a.m. 4-hour candle, because as soon as that candle closes, that's whenever Q3 opens up. So that 6 a.m. candle on the 4-hour time frame, you're literally just looking back one candle. And that, more times than not, will encapsulate the entire London session. You did mention once you have a narrative, you don't need SMT. Are you referring to this continuation? Yes, this is what I'm talking about. Can you talk a bit about what's going to be in the 2025 mentorship? What we're doing now is just preparation. I have to get everybody on the same page. But even for the people that are a little bit behind, I'm going to take y'all from literally ground zero. And it's going to be crazy. And you guys see me calling price week after week. Doing it over and over again. Even the new people that are around. Yo, I'm going to have it set up in a way to where everybody knows what's going on and everybody can be caught on the same page. Even the people that are less fortunate and don't have enough time. We'll try to make it as easy as possible for everybody. And again, you don't need this. If you have the basics down and it's working for you, you don't need to buy any of my stuff. This is for the people that want to go that extra step. Is there a PSP to anticipate Q4 reversals like 10 a.m. or H4? Yes, the same way you would look at it from Q3 to Q2, you would just use it for Q4 to Q3. The only issue with the Q4 reversal, well, actually, if you're looking at the 4-hour time frame, you'd be looking for it daily. The only issue with that is the 10 a.m. candle stretches between two time frames. Not two time frames, two cycles. So the 10 a.m. candle goes between the Q3 and the Q4 cycles. So that's why if you follow the exact time frame alignment in those videos, you'll notice they align with quarters perfectly. And I did that for a reason. But once you get into other candles, that's whenever confusion begins, and that's when you need other things. Yeah, everything can be scrunched down into 369. Literally every concept. It's been a minute. I remember back in like March and April in the Zoo group chat. Everything was being translated into 369. If anybody remembers the Zoo, that was a time. Everybody kind of has their own thing going on now. Yeah, you can make your own kill zones. TPD is literally a kill zone for SMT. And then if you look for TPD at a certain time of day, that's a kill zone within a kill zone. And if you drop down to a lower time frame, another kill zone. Like it's it's crazy. And also the regular trading hours gap, which nobody else has talked about. Nobody else has talked about that. Can be used as a key level as well, which we'll probably talk about in the next one. ICT doesn't use gaps in SMT like we do. How do you anticipate daily cycle? Is that about Q3 of Q3? You anticipate daily cycle from number one, the economic calendar, and number two, that 2 a.m. 4-hour candle. And also, based off of, you can see daily cycle SMT literally the day before. I've called it the day before. Last week we did that. There's a way to know days beforehand, but it's like forecasting, and that goes back to the kill zone thing. But the easiest way to know is just the economic calendar and that 2 a.m. 4-hour candle. Can you share some details on how you anticipate SMT? The economic calendar is the easiest way. Wherever there's news, you can anticipate a Kraken correlation. If a TPD forms before news and there's no current Kraken correlation, then you can anticipate whenever that news comes out, there's going to be an SMT. And vice versa. If there's SMT before that news with a TPD, then you can anticipate the news to expand. What is the story about 369? What's the meaning behind this? It translates to everything. Everything can be put into code, and it will all come back to 369. That's not important right now. You don't need to know any. Like, that's for the crazy people. Those who know. Will 369 be explained in your mentorship? More than likely, but not directly. I've taught you a little bit about 369 just in this live stream, and you didn't even know. But if you translate everything, you'll see it's there. It's what it'll all come back to. But anyways, enough about that. We got too deep into that rabbit hole. For those that were listening to me earlier, this is the gap I was talking about. If you look inside here, I believe it was one of these candles formed a PSP. I believe off the top of my head it was this one, I'm not sure, within that hourly fair value gap. And if you drop down to a 5-minute time frame, there was a way to get in, and then all said and done. And yes, this also does correlate to SMT fill. Thank you for reminding me about that. That was I knew I was forgetting something. Yes, for those asking about SMT fill, this plays a part in it. And that's whenever I was talking about this right here. The cracks and correlations right here. Within the gap. I meant to mention that as well. Wasn't a PSP on indices. Yeah, this one's a PSP right here. A 15 candle within that fair value gap. And as you can see, there was, I believe, then yeah, if anybody remembers the order block model that was taught a couple weeks ago, change in state of delivery, stop loss, not stop loss, entry, and then you can have your stop resting a little bit above this high, and then there she goes. And yeah, you could have used this as well. So you had one entry, second entry, third entry, and then that was about it. Anything below here I don't think is safe. Once price goes past a certain point, it's just not worth trying to chase. Do you ever enter before a 15-minute PSP closes? Do you anticipate it confirming? Yes. There is a way to know. And it's whenever the order block forms. So for there to be an order block within a PSP, there needs to be 3 5-minute candles. If the first 2 candles form a change in state of delivery, aka order block, and then that third 5-minute candle retraces into that order block before the 15-minute candle closes, then you can, more times than not, anticipate that 15-minute candle to be a PSP. You enter before news. How do you know the price isn't going to wake you out? If there's SMT beforehand. But generally speaking, I'm not the type of person to enter before news. I like waiting for it. Yeah, we'll probably go a couple more minutes and then wrap everything up. So if you guys have any other questions, anything you'd like to talk about, now is the time. Yeah, I'm not interested in the NASDAQ right now. This looks piss poor. Especially on the higher time frame. Can you explain SMT fill? SMT fill is only important whenever you have that initial higher time frame SMT. Because I see many of you text me and ask me and point out to these random fair value gaps that one asset didn't fill and one asset did fill. But really, the only time, so I'll say this, you want something that's repeatable and you want something that's consistent. You don't want to try to, anything that's ambiguous, stay away from it. So whenever you see SMT fill, you want it to be immediately after you've had a higher time frame SMT already form and a higher time frame key level on that same time frame. And then, as what was taught with the continuation model, you could look for the continuation model within that key level. And SMT fill doesn't have to be inside of fair value gaps. It can be in other PD arrays as well. Sometimes the assets, well, both assets will leave both fair value gaps unfilled but hit the breaker. One of them will hit the breaker, and that's when should we skip our 9 to 10:30 trade window? If London has expanded a lot, I mean like 200 handles, 200, 300 handles, generally that day will be low probability. How often do you incorporate intermarket analysis whenever you're trading? I really only look for it whenever there's absolutely nothing to find on the immediate assets or triad that I'm looking at. So back to SMT fill, you want to see an initial SMT and then a fair value gap get left. and then after the SMT, one of the assets will retrace into the fair value gap, one of them won't. And if you want extra confirmation, aka the continuation model, you can look for the model that I taught today within there. Do you know about PSP to FEG, like 15-minute PSP and 1-minute FEG inside the wick to entry? Yes, that was taught in the TPD videos, but now we're stretching the boundaries a little bit, and we're not skipping the time frame and following the classic time frame alignment that everybody else knows about. Dropping down from a 15-minute, or going from an hourly to a 15 to a 5, you don't hear that often. You just hear going from an hourly to a 5. SMT fill is another form of cracking correlation where one of the assets will fill a fair value gap or PD array before expanding while the other asset won't. Sometimes PSP does not clearly show whether it is a reversal or continuation. How do you identify each case? Number 1, higher time frame narrative. Number 2, premium discount. See, I think we're going to wrap it up here. I hope all of you have a good night, good day, good evening, good morning, wherever you are. And I will speak with you all again next Wednesday. So I will see you all in the next live.